Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Aheesh Singh from MP9 Asset Management, Graeme Körner from Körner Perspective. To be sure, send us your questions. Email stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, appreciate the time. Lots coming through, but the one that is filling up my inbox, Graeme, let's start that with you. Richemont, and the questions are all broadly the same. Thought the numbers were good. Why is the stock off 8%?
So, I mean, how can we try and explain what the market is doing? It's always natural to explain what I'm doing. So, I don't know. Maybe, in the old days, I used to talk by the rumor, sell the fact. Maybe market a little bit disappointed. I'm just giving a few examples there. But if you look, some, let's call it the ultimate luxury goods play, Ferrari has also had a torrid time. So I think it's a market that's a little bit more circumspect than it was at times in 2025. So that's kind of the best I can do. But 3% decline. If you consider what this stock has done, I don't think it's excessive.
Yeah, and it was just off all-time highs. Is there perhaps something like this? Because it is, it's weird. The update was good. The base was high, so it was a good update on a good base. Does it create opportunity, perhaps? You've been someone looking at Richemont, suddenly it's a case of, maybe he has a chance.
Yeah, so if you have to dissect the recent quarterly results, you'll note that, look, sales were quite good. On an actual currency basis, though, you had single-digit growth. But one key thing that is sort of a stumbling block for them is the high commodity prices. And given that they are hard luxury, if you look at the increasing gold price, that obviously puts pressure on margins. And I think that's what you're seeing the market sort of punishing them on. You have to look through the cycle, though. Through the cycle, top line's been good, bottom line's been good. It's a solid business with solid brands, and it'll do well if you take a long-term view.
Yeah, I take your point. Gold at what, 4,600 in the futures market this morning. That's a lot more than the 2,000 it was just a year or two ago. Aheesh, let's stay with you. Question coming through, Mr. Price. Surely there's value here, even if it's not the best deal. Would you be looking at Mr. Price at current levels? The market has hated on that European excursion.
So let's try and be as diplomatic as possible. Just give the management a chance to speak at their forthcoming announcement or the call. The market has punished them more than what the value of the deal is. However, it is important to note that at first glance, the deal doesn't look value accretive. If I'm not mistaken, the NKD net profit margins look something like 1.9%. And the EBITDA hasn't changed in the last 6 to 7 years. So I think at first glance, market can be right, but we have to give management a chance to show us what their strategy is.
Yeah, and I think what everyone's waiting for, as you said, that capital markets date. They promised us one. Hopefully we'll get some details. Graeme, for you, Mr. Price, opportunity or flashing lights?
Yeah, I think more the latter. I think generally the discretionary retailers in South Africa have had a tough time. You've even seen guys like Foschini that seem to have, their act together. I think there was a fairly high-profile investor in Mr. Price who I think voiced the concerns of the market. Very well-crafted letter, basically said, "What the hell are you doing? This deal doesn't make sense no matter how you look at it." And they seem determined to continue. And I think the reality of it is, if you don't have them, for me, this in a way is almost is like a deja vu of the Woolworths transaction. They were absolutely determined to do this. Unfortunately, it's a management team that has a reputation of being astute, and a company that's executed its expansion well. And the bottom line is this deal just doesn't make sense. And the fact that they seem so determined to do it, I think, is really irking shareholders. And I think the problem is that it could very well do nothing for some time because people like us tend to be quite opinionated, and if you don't listen to us, we don't share our view. We tend to be a little bit brutal. So I think it's going to be. I think my sense is it's not going to go anywhere in a hurry, and then the proof will be in the pudding. Maybe they prove us all wrong, and this is the best transaction ever. I'm very, very doubtful though. So I would just avoid Mr. Price right now. I think there are other clothing retailers that probably have less execution risk. So if you're looking for a theme of clothing retail, I'd rather play others.
Who would you look at in the space in clothing retail?
Well, my pick has been Foschini Group for a long time, but I think equally there's an anxiety that they're going to do some offshore transactions. If you look, in Australia, it's not exactly blowing your hair back, and in the UK, decent assets, but it's a difficult environment. So I think the market there is very worried that they also go, hell for leather to try and increase their offshore footprint. But I think it's a really good management team. I like the breadth of the brands. The acquisition of Jet a few years ago was inspired. So I think a really nice balance. But the bottom line is you've seen it, for example, in some of the commentary on how online gaming has eaten into disposable income. And I think that's hurting these guys. So I think all of them are battling, but I still think, at the risk of being stubborn, that Foschini Group is a really well put together group, and it's well run, and I like the balance sheet.
Yeah, it could be a brave management team to announce an offshore acquisition in a hurry right now. Aheesh, who would you look at in the clothing space? Is there anything that particularly interests you?
So one of our top picks is Bidcorp. I think very different market to Foschini. I think they have something like 30 million active customers, stable margins over time, good business that's expanding in the right places and targeting the right market. At current valuations, looks quite decent, and I think much more resilient than Mr. Price right now.
Yeah. And I mean, I say it every time, that little flash business, which has sort of been sitting there, I think, ignored for a long time, really coming to the fore. Aheesh, a question coming around BHP Group. It's the diversified which I hold. All this M&A making me worried, but they get left behind with no copper. They, of course, kicked us off, some 2 years ago with their offer for Anglo American. Would you be a worried BHP shareholder if you were holding at this point with their lack of copper exposure?
Look, I think there's always going to be different trends at different times. Copper is in vogue right now. Unfortunately for BHP, they have a very, very small copper exposure relative to others. They're going to have to do something quite soon to sort of gain some market share in that space. However, if I'm not mistaken, their big exposure is to iron ore. And right now, China is sort of looking at they've been increasing their appetite in iron ore. So we'll have to wait for results and see. I think currently BHP is at 17 times earnings, currently trading close to 52-week highs. You'd want to take a better look at that sector and see where offers you value and growth, rather than staying in a company that's not looking to strategically grow.
Yeah, and there was the news over the weekend. China's going to build a 70 gigawatt dam series, which is going to need a lot of steel. Graeme, BHP concerns, or is iron ore a fine commodity to hang into?
I think the thing that's always drawn me to BHP Billiton is the sort of through the cycles. They've got great quality, low cost assets. They've got historically they've had a strong organic growth footprint. Just to think of what they've been doing in Western Australia, so in iron ore. So I think part of what draws me to them is they're the non-cyclical commodity, if I could call it that. Generally very, very conservative. I personally believe that when the dust is finally settled, especially if it's in an environment where you've had a couple of other mega mergers and people have been sort of maybe chasing deals, I still believe that Anglo American will be a great acquisition target a year or two from now, and maybe they just have to bide their time. Obviously, Anglos would plug any gaps in their portfolio very, very nicely. So, if you get a Rio Glencore merger, for example, that would cause let's call it indigestion and a lack of focus on new deals for a season, I would imagine. And I think Anglo's, particularly, you must remember, Anglo's will be it is a much cleaner, much simpler business. Yeah. Obviously, the Canadian expansion may add a level of complexity, but arguably a lot of the, let's call them the possible hurdles that they might have faced previously in terms of now investing heavily into things like platinum, which was not really their core focus. Arguably that stuff is out of the way. So I believe Anglo's will be a juicy target regardless of what happens in Canada. So I think what I'm saying is that just at its core, it looks decent. I think, the earnings are solid. The returns are solid, really nice dividend yield. We don't talk about that in a world where gold and platinum shares are flying. Yeah. But this is the one commodity play that I believe really is suitable through most cycles.
Yeah, and I take your point. It kind of the golden PGMs sort of sucked all the oxygen out of the room to a fair degree. And chunky dividend, as you say. Let's a quick question before we head to break. MTN seems to be breaking higher with a look, even as it has run hard. Graeme, I mean, MTN's doubled, tripled in the last year or so. Would you be looking at this point, or is it gone too far and getting too rich?
For me, it's even more fundamental than that, Simon. And do I want to be in people who sell airtime and data into 2026? There's just so much dynamism in that industry. I mean, I just ask the question: what happens if Starlink launches, in a big way in Africa, in South Africa, for example? It could mess them up. And also, of course, you probably saw some of let's call them economic and political commentators feedback on their Iranian position. So I think, sometimes share prices can double and you're not there and you sort of feel massive regret. But generally, I don't want to be in the telcos myself right now.
Yeah, and sometimes they halve and you feel massive smartness. Aheesh, would you be looking at MTN at current levels?
I tend to agree with Graeme's view. I think sometimes does the return justify the risk? I think right now, maybe not. If it does become cheaper, worth a look. But for now, there's better value in the market. Yeah.
And I don't get the telco story. They're kind of like a utility with massive capex costs, which always hurts. Graeme, a couple of questions coming through, and some over the weekend, talking around Trump and his tantrums and 8 EU countries to get more tariffs, potentially on the 1st of Feb. Tomorrow's 1 year of his presidency. If I kind of summarize them, it's been a wild year. The short version is markets seem sanguine. Do they carry on being sanguine to Trump's actions?
At the moment, I was jokingly referring to an old BBC series, Simon, where Yes Minister, where the attitude was politicians come and go and the civil service remains. And I think the markets are kind of taking that view. But I think, and I think that there's, somebody was saying to me earlier today that I think Trump has changed his trade policy with China 17 times in the last year.
Yeah.
So you don't hang on anything. This obsession in inverted commas with Greenland is intriguing. Also, this tariff I thought was really crazy, because we've seen this play out, that we put the tariffs on, then we realize that this is going to be a tax on consumers, and then we pull it back. So the idea that tariffs are this huge weapon, I think, is also misguided. So the short answer to your question is, I think the markets are underplaying the near-term risk. The question is what the long-term damage is to institutions like NATO and the UN and so forth. And I think some lasting damage is being done here. And of course, also in international relations, globally, foreign policy has become a little bit of a lotto. So I think the markets are kind of taking the view, don't worry, it's the old Tucker argument, he'll back down. But I think we've become a little bit blasé with the whole thing, is my sense. As with markets in record territory and everybody betting on inflation being under control and all sorts of things, I think we're a little bit complacent, frankly.
How do you stand on this? Because, I mean, it's a fair point. I mean, there almost is a level of complacency, and maybe we could put it down to the hyperscalers and gold prices. But, I mean, it is crazy times, and our market does seem to think, well, no worries. How do you guys look at it at MP9 Asset Management?
Yeah, very much the same way. I think you have to be complacent of what's going on. But at the same time, it's the actions that you don't know will happen that can lead to markets correcting. I think there may be things that are in Trump's mind that maybe we don't even know about that could move markets maybe tomorrow or on Friday. So it's always hard to capture that risk when you're investing, and it's something that I think most people struggle with, the unknown unknowns.
Yeah.
And you have to position your portfolio as best you can. I think to Graeme's point, whatever's happening now in the US could lead to long-lasting damages, and it's up to the new president in a couple of years' time to try and repair that as best he or she can.
Yeah, but I like your point. I mean, investing has always been the unknown unknowns, to quote, was it Donald Rumsfeld, and that's just how we invest. Question coming through about Bidcorp. I've been watching it for a while. It's been slowly drifting lower. Is this worth adding to my portfolio? Aheesh, Bidcorp, spun out of Bidvest, had a really good ride. Finding it a bit tough the last year or so, but still a good business. Would you be looking to add it at these levels?
Look, it's always been a well-run business, and it does have durability and all the qualities you're looking for something as a long-term investor. I think it's definitely something you want to hold, but it's all in the context of your risk parameters and what sort of returns are you looking for. I don't think it's a business that's imminently innovating in a big way, but it's still a solid counter for a portfolio.
Yeah, Graeme, I mean, boring, but boring sometimes quite nice. Your thoughts on Bidcorp?
Yeah, Simon, it's almost like the forgotten big cap, if I could call it that. You know,
Yeah.
so few people. I was actually reflecting on it. It's very much on my radar. It's come off nicely. Obviously, near term, a couple of small headwinds, particularly the lack of food inflation. But I think it's a really, really well put together business. I think they've been incredibly astute at acquisitions, at not just doing the transactions, but also bedding them down and driving organic growth. So, you know, when I look at this business, I think you've basically got it. It's for all practical purposes an offshore business, you know, operating in the UK and the Far East of Australia, all over the world. You know, and a business that maybe is not going to shoot the lights out if you look at it in terms of what the earnings growth will look like in dollars or, you know, Aussie dollars or whatever. But, you know, I think it's a really good business. I think they're very, very well placed, not only geographically, but in this sort of, I almost call it the new era or the new world of food and hospitality. So, yeah, I have very, very little exposure, but it's a stock I'm doing a fair amount of work on, and I'm actually probably going to pull the trigger in the next few days. So, in answer to the question, I think the stronger rand has made it look worse than it actually is. And I was actually reflecting, this thing really should, you know, have a primary listing offshore to reflect the nature of the business. You know, but yeah, I think it's a great, a well put together business that it looks a little bit full considering the 15 versus what you get a lot of South African players on, but the good dividend yield, and I think they'll execute well. And yeah, so the short answer is yes, I think you can add them at these levels. I'd probably go slowly because it actually feels as though the rand's going to go a little bit better, which will weigh a little bit on the local price.
Yeah, of course they report in rands, but as you say, they trade in I mean, I don't know, a dozen currencies probably. Question around Afriat, surely offering some value, particularly as we start to get some hopeful GDP growth, and Lafarge has turned around. Graeme, Körner, would you concur with Afriat offering some value here? I mean, it may be, look, our GDP might go to 1.5, which is a big jump, but not a big number.
Yeah, but, you know, Simon, I think we're laying, as a country, we've laid a lot of positive foundations in terms of some reform, you know, the public-private partnerships that I think you will see unleashing some spend in let's call them neglected sectors like rail, for example. So I think that this mindset that we've got, that if South Africa is doing well, it gives you 1.5% GDP growth. We could actually quite easily be in a very different world. So I think a company like Afrimat is very, very well placed on a variety of levels. So it's obviously not a widow and orphan stock, but I always say, Wilson Bailey Homes has been our preferred GDFI play or construction type play, but I think Afrimat looks attractive at these levels as well.
Aheesh, Afrimat for you, I mean, it was, I mean, Lafarge, I mean, the delay in the deal made it perhaps a less great deal, but still, I mean, a management team who are, this is what they do. They bed down new businesses.
100%. I think at these levels, it looks relatively good, and I think as long as there's optimism in the economy and we see some activity pick up, that will definitely go straight down to the bottom line. These businesses can be cyclical at times, and it's very tied to the economy.
Yeah, they agree on that 100%. Question coming about food producers. Please ask your esteemed panel, that's you gentlemen, which would be your preferred food producer, if any. Aheesh, do you have a preferred food producer?
Yeah, for me, it's Tiger Brands. I think stalwart in the market, good brands. We've held them for very, very long. For the last, well, it's been a solid part of our portfolio for the last 2.5, 3 years. It's not something we've sold and we continue to hold. I think it still offers good value. Yes, relatively higher than what it used to be, but still a strong business.
Yeah. And that collapse that we see there was them going ex-dividend, which got everyone a bit freaked last week. Graeme, for you, a preferred food producer?
Yeah, I must say, I mean, Tiger Brands has been one of my pet hates for an extended period of time, but they definitely seem to be back on the straight and narrow. I think Premier, though, arguably is looking good as well. Quite different businesses. If you put a gun to my head, I'd probably rather go with Premier.
Gotcha. Okay, one for Premier, one for Tiger Brands. Question coming through around Grindrod, quite simple, short, still worth holding. I mean, their port business, Graeme, Maputo, Richards Bay, worked well for them. They might get some of the Transnet stuff as well. Your thoughts quick before we go to stock picks on Afrimat?
Yeah, on Grindrod.
Sorry, Grindrod.
Yeah, I don't really have a good enough feel for it, but I saw Maputo volumes at records, and they are very, very well placed for let's say a more liberal market in road.
Aheesh, for you, some Grindrod?
Yeah, I think same view. Not something I follow very closely, but yeah, same view as Graeme.
So let's go to some stock picks. Aheesh, going with bellwether giant retailer Shoprite.
Yeah, so I think at current levels, very close to its low multiple. If you look over the last 3 years, trading close to the low end of that band, consistently 3% net income margins, solid top line growth between 9 and 12%, and definitely really going deep into the South African economy in terms of how much of the population it touches. So I think going forward, still some value there.
Yeah, and of course, going into the banking world, as is it seems almost everyone. Graeme, Körner, PayPal.
Yeah, so I think if you mention PayPal in polite company, a lot of people sort of look at you funny.
Yes.
Because a lot of investors held it, maybe 4 or 5 years ago, with all the promise around e-commerce, and yeah, it lost 80% of its value. In large part, still doing what they always did. I always say, if you look at what the earnings have done, the model hasn't really changed. Although arguably a couple of years ago they were a little bit fixated on growing at all costs and doing pretty lousy margin business. I think there's a largely new management team in place there. But when I look at it, it's very much entrenched in e-commerce. Some new initiatives as well. Also well placed, I think, in a crypto world. But my bottom line is you're paying a sub 11 PE. Dividend yields obviously almost non-existent, but you're paying a sub 11 PE for a business that I think will probably deliver early to mid-teens earnings growth in dollars. So it's kind of in a way, the non-tech stock. That I think what does need to happen is those people who are hurt need to get out of it, and a new guard of shareholders, lunatics like me, who sort of buy, let's call it, reasonable levels of earnings growth on reasonable multiples. So I think you need to see that register transition a little bit further. But I think you you're very well placed in a business that in some ways is almost like a utility.
Yeah. Yeah, I get you. And I mean, it was what, a $300 stock back in the pandemic. I hadn't realized that it got quite so elevated. There are a lot of people who have painful memories with PayPal. We need them out of the way. That's it for Stockwatch today. Thanks to our guest, Aheesh Singh, MP9 Asset Management, going with ShopRite. Graeme Körner from Körner Perspective, going with PayPal in New York. Up next, The Close.